Hi guys, good morning and welcome to this Money Control live stream. You're watching Opening Bell with me, Nandita Khemka. It's a beautiful Wednesday morning, but not so for the global markets, given the fact that we had a mixed close overnight and Asian markets not looking all that great. GIFT Nifty was down some 50 odd points when I last checked. And in the pre-open, I can see some red ticks on the screen once again, but at least the pre-open doesn't show deep cuts as of now, and a lot of tariff talk happening with Trump saying that he struck a deal with Indonesia wherein he will be charging, or Indonesia will be charging 19% for exports or US imports rather. So yes, we are seeing some bit of reaction across global markets, but in the pre-open I can see the Sensex is slightly in the green. Of course, we'll see what happens at 9:15, but the big question is whether we will react to global cues or we will chart our own path and move higher because we did see a good up move in yesterday's session. But US CPI data not all that encouraging, and that could keep a lid on gains as well. So lots to watch out for. Lots of stocks as well will be in focus, the likes of HDFC Life, HDFC Bank as well. The company will be considering a bonus issue and a special interim dividend along with its earnings on the 19th of July. So perhaps you could see some green tick on that stock in today's session as well. Keep your stock related queries handy as well. We will address them as we go along the show. But before anything else, let's take a look at the top headlines at this hour. The Dow Jones and S&P 500 end with cuts amid inflation worries and a mixed bag of earnings, but Nasdaq notches record close thanks to Nvidia. US consumer inflation rises 2.7% on a year-on-year basis, in line with expectations. Asian markets lower, while the GIFT Nifty negative right now, and in the pre-open we have turned positive. Crude oil prices continue to fall amid concerns over Trump's 50-day deadline for Russia to end the war in Ukraine and potential sanctions. Meanwhile, gold prices take a hit on US inflation data and tariff updates. US President Donald Trump signals progress on a potential trade deal with India, says we are going to have access as talks between the two nations gain momentum. He also confirms a preliminary trade agreement with Indonesia, which will impose a 19% tariff on the country's exports to the United States. RBI governor says not allowing foreign banks to own a 26% stake in Indian banks defies logic, adds that the central bank will examine cases if any requests are made. In an exclusive conversation with CNBC TV 18, the governor also rules out any bank licenses to corporates. And more earnings on the block as IT companies Tech Mahindra and L&T Tech along with ITC Hotels are set to report first quarter earnings today. Well, it was a good day of trade yesterday. We did manage to snap out of a 4-day losing streak. The Nifty reclaimed that 25,200 mark intraday level, but ended just shy of that 25,200 mark. The breadth was in favor of advances. Broader end of the markets outperformed for a second straight day. The Nifty Bank also ended above, just a little, over that 57,000 mark. And you saw good traction in auto names. Four-wheeler stocks did well despite Tesla's India entry. We had two-wheelers taking the lead yesterday. Although even though IT was doing well, HCL Tech was reacting to its number. The stock was down 3% on the back of a big margin disappointment. In terms of fund flows, then, foreign investors were net buyers to the tune of just 120 crore rupees, but the trend reversal did happen. Did see some bit of buying coming in after 2-3 straight sessions of selling. For domestic investors, 1,500 crore rupees worth of stocks bought in the cash market. In terms of put call ratio, climbed to 0.88 vis-a-vis 0.72 in the previous session. And same as yesterday, no addition or deletion from the F&O ban list. Glenmark Pharma, Hindustan Copper and RBL Bank will remain in the F&O ban today. Joining me now, Jay Thakkar, Head Derivatives and Quant Research at ICICI Securities. Jay, lovely chatting with you this morning. Yesterday there was a sigh of relief. We did see that 25,200 level back on the charts, much to the relief of traders and investors. But this morning, things not looking all that hunky-dory, right? Inflation data throwing a spanner in the works. But do you still see chances that perhaps we could defy global cues and perhaps move higher, again look at 25 to 50 kind of levels? Is that a possibility, or would you say that the setup is really negative and we could once again inch lower, and 25,000 will be put to test once again.
Morning to you, Nandita. Thanks for having me on your show again. Nandita, I would say that yes, one thing which I'll say is that the IVs are pretty low as far as Indian markets are concerned. If you look at the Nifty or the Bank Nifty, I mean, Nifty IVs are trading between 10, 11, Bank Nifty and Fin Nifty IVs are trading between 11, 12. In fact, if I look back for the last 250 days or 250 trading sessions, Nandita, the implied volatility percentile for Nifty, Bank Nifty, and that of Fin Nifty, I mean, all of these indices which are traded on the FNO segment, I mean, they're trading at between 1 to 2 levels, and that's the extreme level, I would say, on the lower side, because generally we have this IV percentile between 0 to 100 range. When you have it falling towards the lower end of the range, clearly indicates the rise in IVs. Now, generally, rise in IVs going forward is going to happen is associated with the fall in equity markets. If I attach the subjective or the judgmental probability to it, then it would be 70% of the time it happens so, and 30% of the time it has happened so that IVs have gone up, then the markets have gone up. Both has happened, right? So based on the historical evidences, I think that on the upside, you are going to see Nifty facing the selling pressure unless 25,500 levels are not taken off decisively. On Bank Nifty, it is clearly 57,500. So these are the levels. I mean, Nandi, that these levels are not taken off, you would see, selling pressure at the higher levels. Volatility being down for the medium term perspective is positive for sure, but for the short term, it's too down or it's too low right now. On the downside, 25,000, yes, that's the immediate support wherein you have the highest open interest on the put side. The PCR is also quite oversold. So you may see until the expiry Nifty trading between 25,300, 25,000 probably. But if 25,000 breaks, it will slip to 24,800 as well. So for me, the medium-term reversal on Nifty would be beyond 25,500. If that happens, definitely then it's heading towards 26,000. Else it's sideways to negative is what I can say. And of course, as you mentioned about the inflation data in the US, I mean, that's absolutely not positive, which is one of the cause for the dollar index going up. Nandita, and dollar index is going up almost after 5 to 6 months. I mean, looking at the current levels, the probability of dollar index closing in the positive territory for this July series or July month is quite high, looking at the current data. Now, if that happens, it would be a reversal after 5 to 6 months. So you can see the retracement happening right from 110 levels to whatever 95 to 96 levels we have seen so far. I mean, even for that matter, it's $14, $15. And if it retraces back by 40% as well, Nandita, that means you are going to see at least $6 kind of a bounce. That means dollar index might bounce back to 101, 102. So if that happens, that would also not be positive for the metals, bullions, and the equities.
Got your point, Jay. Good point that you made is that IVs are, indicating that we could see selling pressure at high levels, and we haven't really been able to sustain higher levels. Although good part is that we've been able to defend, 25,000 pretty well. So yes, sideways to negative. That's the way forward till 25,500 gets taken out on the upside. And Bank Nifty we did touch upon, just about 3 minutes to go for the markets to open. But HDFC Bank will be in focus today. It will be considering a bonus issue and a special interim dividend along with numbers on the 19th of July. Do you see chances of, fresh highs being tested today on the back of this news flow?
Well, I think that is difficult. I mean, if it happens, definitely it's going to be positive, Nandita. As far as I look at the technicals, I mean, the stock is again back into the range. It's not negative, I would say. Among the private sector banks, the only bank which has actually witnessed good amount of selling pressure recently has been Axis Bank, apart from that ICICI, HDFC. As a disclaimer, I don't have a view on ICICI Bank, but I would just say that these banks have gone sideways, right? But then, I think yes, beyond the levels of 25, 2025, right? You will see a breakout on HDFC Bank, and that can help Bank Nifty to relatively outperform the Nifty for sure. And even if I look at the IV's data, I mean, near to the results, Nandita, generally I've seen HDFC Bank IVs to go up to 28 to 35 levels as well. And this time around, we have seen it's just at around 16, indicating that there is a less chance of a downside.
Okay, less chances of a downside on HDFC Bank. This stock will be in focus today on the back of this news flow. But let's talk about your recommendations first, because we just have 2 minutes to go for the markets to open. What would you be recommending to our viewers, with a 1 day or 2-3 days kind of time horizon?
I've sort of a pair trading, Nandita, right now in the market. I mean, if I look at the auto segment, then Hero MotoCorp is definitely looking positive. I mean, if I look at the data of the futures, then there is still some more short covering which is happening. We have witnessed that. And Hero MotoCorp has, lightened the position on the short side, and rather we are further seeing some, short covering as well. It has provided a very good technical breakout from a sideways consolidation as well. It's trading around the levels of 50, 44, 54, so one can go long on Hero MotoCorp. I mean, a plain long would be with a stop loss of 43.50 and a target of 4600. Else, that could be a pair with Tata Motors, and Tata Motors is looking negative. So I would say that it's like long on two-wheeler name, Hero MotoCorp, and short on Tata Motors. Because until unless we don't see Tata Motors surpassing the levels of 705, wherein we have seen a huge chunk of 700 and beyond, a good call open interest as well, call base as well. The probability of it falling until the levels of say 660, 650 is higher. So that's a pair trade on an individual level as well. One can do the same.
All right, a pair trade, go long on Hero Moto and go short on Tata Motors. Just about knocking at the market open, with 2 seconds to go, but yes, the first ticks mixed, no deep cuts, no great up moves as well. Sensex marginally in the green, it's given way now, it's slipped into the negative. 20 points down on the Sensex as we speak, and 20 to 30 points down on the Nifty as well. We'll just wait for it to settle down a bit, because right now it's just like flitting between the positive and negative zone, but finally it's down 30 points on the Nifty, 25,166 as we speak. The mid cap index in tandem with benchmarks, very flat, flitting between negative and positive zone. But as of now, at the start, the ratio, advanced decline ratio on the NSE is skewed in favor of gainers. Early days to really comment on the trend as such. So we'll wait for things to really settle down. The Nifty Bank index, although is in the green, 100 points higher, 57,124. So we're just building on the gains that we saw on the Nifty Bank index yesterday. I just want to see what some of these HDFC names are doing. HDFC Life post numbers, the stock is the top Nifty gainer. Numbers weren't all that great in terms of the VNB margins and VNB, value of new business as well, although premium addition was premium income rather was pretty good. So HDFC Life top Nifty gainer as we speak. HDFC Bank on the back of news flow that it will be considering bonus and interim dividend along with numbers. The stock is up over 1% among the top Nifty gainers. SBI Life has had a rub off impact from HDFC Life. That's also among the gainers. Trent from the consumption basket is doing well. Eicher Motors, so two-wheelers extending gains as well. Eicher Motors among gainers. Tech Mahindra ahead of numbers, trading with gains. Tata Consumer, Adani Ports, and IndusInd Bank as well, extending its gains from yesterday. L&T, ITC, Bharti, Airtel, these are some of the other movers on the index. In terms of laggards, you have some of these NBFC names once again slipping into the red. Yesterday they were doing well, but today once again they are back in the red. Shriram Finance, that stock is down 4%. Bajaj Finance down 0.9%. Bajaj Finserv as well down 0.5%. You also have ICICI Bank trading in the negative. Bajaj Auto, that saw good gains. It was the top among the top Nifty gainers yesterday. That's given way and it's down in the red, 0.5% lower on that stock. Cipla, Reliance Industries also trading in the red. Remember, the company reports numbers this week. Ultratech Cement, Hindalco, M&M also in the red. So yes, it's a mix of autos, pharma, NBFC names that are hogging the limelight when it comes to the losers list. But let's take a look at the sectors then. Yesterday, all the sectors managed to end the day in the green. Autos were in the top gear today. Autos are going downhill, 0.5% lower on the auto pack. You have FMCG trading with marginal cuts, IT as well, marginal cuts. Yesterday IT was also in the green, but it's extremely flat at the current juncture. Metal pack is down 0.5%. So it's a metal index, the Nifty metal index, that's taking the lead when it comes to the losers. What's holding out is PSU banks. Of late, PSU banks have seen good traction, even compared to private banks. PSU banks have been doing well. Today as well, the Nifty PSU Bank index is up almost 4 tenths of a percent. But talking about HDFC Life, then first, Jay, numbers came out. Premium income was good. It grew 12.5%, managed to beat expectations. Retail premium up 12.5%, that met expectations, but VNB margins were extremely flat. They were unchanged on a year-on-year basis at 25.1%. Expectations were in excess of 25.5%. Value of new business on the whole was up 12.7%, largely in line. Looking at the charts of an HDFC Life and an SBI Life now, what would you do with these counters?
Well, see, Nandita, I think that the overall BFSI segment, particularly, the insurance space, I would say, has recently done quite good. I mean, even if you look at the data, quantitatively, if I see, then, the prices are trading well above its, 20-day or maybe even for that matter, 40-day VWAP. Second is, if I look at the deviation, the mean reversion that has happened, clearly indicates that the medium-term reversal has also happened in, insurance stocks, mainly SBI and HDFC Life. And looking at the futures data, I see that there has been good long build-up. Now, recently, the correction or the sideways consolidation, that's happening, particularly in these two stocks, wherein I also look at the FNO data, is indicating that there is some profit booking that's happening at the current levels. And I think that profit booking can lead to some correction in the stock as far as particularly in, when I talk about HDFC Life, it can slip to 740 and HDFC SBI Life can slip to say as low as 1750. I mean, those are the levels wherein one can review of entering back into the stock on the long side. The short-term momentum traders can definitely look for, selling these with a stop loss of 1 or 2%, eyeing for around 4 to 5% downside. So 4-5% cut based on profit booking cannot be ruled out. That is what I see. But overall medium term trend is positive. So we can say that short term trend is down, medium term is positive.
Okay, short-term trend looking on the downside for some of these life insurers, and the medium-term trend remains intact. Another stock that's in focus, which of course you won't be commenting on, Jay, is ICICI Lombard. Just want to touch upon what the numbers have been like. Profits have been up 29%, net premium earned rises 14% on a year-on-year basis, and combined ratio is at 102.9% vis-a-vis 102.5% on a quarter-on-quarter basis. So it's inched up, both in fact on quarter-on-quarter and year-on-year basis. Morgan Stanley, has an equal weight call on the stock. Target price is at 1885, lower than current levels. They've said that the PAT has beaten expectations on the back of higher investment income from capital gains, and profitable growth focus will be positive, but upside will be limited at 36 times FY26 price to earnings ratio. So basically, valuation wise, they are a little circumspect, which is why I think they've charted out a lower target price from the current level. So that's ICICI Lombard for you. But shift focus to talk about Just Dial. Numbers came out yesterday. Profits were up 13%, revenues grew over 6%, margins also came in higher at 29% vis-a-vis 28.7% on a year-on-year basis. The stock is doing fairly okay today. Last 1 month as well, it has seen a good 7% kind of a gain. But it's still sub 1000 levels. Is the chart pointing to more upside? And if yes, could 1050 be the next level to watch out for on the upside?
Yes, Nandita. I mean, we have seen this stock, in fact, forming a base, since February of this calendar year, and February, March, April saw a good recovery, in fact, and then again after that smart recovery that had come in April, we have seen this stock going sideways for past 2 months, and that's the entire market which has gone sideways. Most of the stocks are sideways, so that's fine. But then, yes, the overall chart setups look positive. I mean, unless you're not seeing this stock going way below 770 levels, and that's pretty far. But then that's what the levels is. I mean, for the short-term traders, it would be 850. For the positional traders, it would be 770. I think these levels are held. I mean, in the short term, you can see 1200, and on the medium term, yes, it can inch to maybe 1500 as well. So that's how the risk reward is placed. I think it's on the buy side. It's quite favorable for the bulls in the short to medium term.
Hmm. Okay, that's a view on Just Dial. Can even touch levels of 1500 or thereabouts. But let's talk about, let's stay with the technology space and talk about Tech Mahindra as well. The numbers will be coming out today. Of course, we know that the IT earnings season hasn't really started on a very sanguine note. Expectations were anyway subdued, and TCS at least missed expectations, and HCL Tech as well, margin disappointment. But for Tech Mahindra, the constant currency revenue is likely to decline somewhere around 0.5 to 1% on a quarter-on-quarter basis. There will be growth headwinds in telecom, high tech, etc., and manufacturing and BPO as well, as we've seen in the earnings for other players as well. USD revenue, the dollar revenue may rise somewhere around 1% or so due to the currency tailwind, the rupee depreciation. EBIT margin expected to improve somewhere around 20 to 60 basis points to around 11%, and PAT in fact may grow somewhere around 3% on a quarter-on-quarter basis. Deal wins are estimated between $600 to $750 million, and Project Fortius led cost savings will support the margin improvement. The commentary on telecom recovery and margin roadmap will of course be in focus, and of course the large deal pipeline and execution progress and what clients are doing. These are some of the other things that will be in focus. But Tech Mahindra per se, has managed to outperform its other peers, larger peers, and it has also been handed out a few downgrades by brokerages in recent times due to valuation concerns. Chartically, given the fact that it has outperformed the larger ones, if you look at the 6-month YTD charts, etc., would you say that it will continue to do so, or would you say that the stock has lost steam and it is expected to move downwards?
Based on the seasonality, when I look at Tech Mahindra and Nandita, over the past you know, 17 or more than 15 years, I've seen that, generally in the July series, it has been positive. I mean, there has been instances wherein it has been negative, but generally you get in the July series kind of, on an average basis, more than 5 to 6% kind of move. And, it goes up to 10% as well. And generally you have this result season out. So that's one of the reason as well for this stock, doing that. And that's on the seasonality. As far as when I look at the futures data, Nandita, then what I see is that Tech Mahindra 2, along with the other IT names, had seen a good short build-up happening. And recently as well, I've seen again shorts getting build up. So the data is not much positive, because all the shorts which we had seen had got covered, due to which we saw very strong rally in Tech Mahindra. I mean, that was one of the best from, say, 1200 levels to 1700 levels. I mean, almost 500 points. And that's up nearly around 46 to 50%. And it almost reached to its all-time high levels of 1800. But now again, the shorts have started to get built up. So I would like to wait for the results. I mean, if those results are good, definitely we'll see further short covering, and maybe, the stock would outperform the overall Nifty IT. Else, it might struggle, and it might fall back to, say, 1500 odd levels or so. So as of now, the overall trend also in the IT sector has been negative. So rather we wait for the results and see if it is really above expectations, and there is some game changing guidance, or some very positive guidance. It can be reviewed. Else, most of the IT names are seeing some negative, are trading with a negative bias only.
Okay, that's a view on Tech Mahindra wait and watch approach. See how the numbers turn up and then perhaps take a call there. But let's shift focus to stock queries then. Quite a few of them have trickled in. In fact, I can see one on Infosys from Pooja Khanna. She's holding Infosys at 1730, wants to know if it's a good time to average. What would you advise her? Would you advise her to wait for the numbers here as well? Or would you, say that it's a good time to average?
I would definitely say, one can wait for the numbers, because Infosys too have seen a good short build-up. I mean, see, Nandita, I would say that when I was just discussing about Tech Mahindra right now, when you asked me, then, it was, I mean, we have seen good short covering happening in Tech Mahindra. And with few days of, selling pressure again in Nifty IT stocks since the result season has started, Tech Mahindra has seen that short getting build up, right? So otherwise, it had covered all of it. Whereas, Infosys is concerned, Nandita, I mean, right, or maybe, since the previous highs of 2000, since when the fall had started, it has not witnessed that kind of short covering. So I would say that it's again back to its 52-week highs of shorts. So if the results are positive, I'm going to say that Infosys is going to see one of the good short covering rally, which can take this stock to probably 1700 levels as well, or maybe beyond those levels. Because there are a lot of shorts. If the results are positive, good. I mean that would make shorts getting covered, right? Else, you'll see further selling pressure. I mean, definitely until the levels of maybe even for that matter, 1500 and below, maybe for 1450. So it's going to be either side move. A big one is what I'm expecting in Infosys, particularly in this month. And when I look at the IVs, I mean, that's also, you'll come to know pretty well from those levels. So IVs are trading currently at 28 or so. I mean, that's quite decent, I would say, as of now. It's quite in the midway right now. But I can say one thing, Nandita, is that the IBP is at around 87.2. So that means it's inching towards the upper end of the range. So post the results, you're going to see this, volatility and then some particularly sideways momentum. So if results are positive, a short covering is likely to happen in Infosys for sure because there are a good amount of shorts. So if you're holding it, I think your stop loss would be 1530. Now, whether to buy more or not, I think one should definitely wait for the results. I mean, if results are positive, it is trading above 1650, you will see short covering. Thereafter, you can add.
Right, there's the advice for you on Infosys. If the results are good, you can expect a short covering rally. Good to hold it right now, and if you want to buy it further, wait for the results. Next query then, I think I want to take up a query on Biocon. The stock just hit a fresh 52-week high in today's session. Deepu Jayan wants to know your thoughts on whether or not one should enter the stock at current levels for the short term. US FDA has approved a key diabetes treatment drug, which is why it is getting a booster shot today as well. The stock has already rallied in excess of 11% in the last 1 month. How are you placed on the risk reward picture when it comes to Biocon, given the fact that it did hit a fresh 52-week high today itself?
I think yes, it has reached to a level, Nandita, where it generally falters, at around 400 levels or so. 400, 405. So if someone is holding, I mean, one should definitely continue holding it. The trading stop loss will be 317. We have seen a good short covering happening in Biocon. Rather, now it's showing strength and good signs of long build up as well. The momentum has been positive. It's trading well above its 20-day VWAP. That's also positive. So overall, the price setup is positive. I mean, the price data, the price volume, OI data is all positive. It's just that when I look at the options data, I mean, at 400, you've got that huge concentration of the call. So there's a high call base at 400. And the reason for that is that in several occasions in the past, maybe, in September 24, thereafter, it inched to 400 and to 405 levels in January of this calendar year, back to those levels in February as well. And now we are seeing those levels in July. 405. I mean, I would say that that's the level. I mean, if this momentum continues and if 405 levels gets taken off, these call writers at 400 would thereafter lead the further short covering and which can take this stock to probably, all-time high levels as well, for sure. So beyond 405, you can add more. As of now, you can keep holding with the stop loss of 370.
Okay, that's the view. Beyond 405, you can buy more and hold the stock with a stop loss of 370. I want to squeeze in as many queries as we can, 2-3 more queries then before we move on to our next guest. We have some new people writing in. Jaskaran Bajwa wants to know your thoughts on BHEL. His average price is 262 rupees. Wants to know your thoughts as to what he should be doing. The stock has cooled off. Last 1 month it hasn't really done anything. 5 days has been sideways to negative at 255 levels. The levels are lower than his average price. What should he do? Should he keep holding on to it?
I think no. I mean, one can exit because it's lacking the momentum right now. I mean, Nandita, so it's better to be on the stocks when there is a momentum because already there is no momentum in the market, and particularly thereafter, if you don't have a momentum in the stock as well, then I mean, in both the sides you are just losing. So rather, at least the stocks are having momentum when the market is not having it. If the market supports, probably you make the short term gains even faster. So that's how it has to be. Short term, BHEL has a very clear sideways to negative bias.
Okay, negative bias in the short term. That's the view. Hope that answers your query. Next query then, Arpan Kar wants to know your thoughts on PNB Housing. Hasn't really sent in a pointed query, but any thoughts on what should be done? The stock is, I mean, it's really sideways, so to say. Last 1 month hasn't had a very solid run or so, but it did see a spike, so to say, from 19th June onwards. 1096, what should be done here?
I would say in the medium term, definitely. I mean, the stock is looking positive. It's a recent entrant in the FNO. I mean, I have just 2 months of historical data, so would not be able to comment much based on the 2 months data. But then so far, though, that has been good. So we have seen long build up only in PNB housing. So with whatever FNO data we have is positive. Fundamentally, we know that it's
Okay.
banking and financial services for the medium term to long term have turned positive. I mean, we have recently heard the Mr. Marota's point as well again that there could be further rate cut as well if the inflation dips further and if it remains down. He's clearly cited that there is a chance of further rate cut as well. So overall, I would say that medium to long term outlook is positive for banking financial services, and among which PNB is definitely a good recovery, which we have seen a good momentum, volume, long build up. I don't see this stock, correcting much in the medium term. In fact, short term, it has got a support at 1050. So for the short term traders, that could be the stop loss. I mean, it's trading quite sideways, as you said, Nandita, and it's been consolidating. So if it breaks above 1150, I mean, you can see it inching towards 1300 as well. But from the medium term perspective, one can keep accumulating this stock.
Okay, that's the view on PNB Housing. Last query, just about time for one more. GC Prakash wants to know your thoughts on CAMS. He wants to know the next major target to exit. He's holding 50 shares at the rate of 3,000 rupees per share. He's making good profit here. So, should he wait for more upside or take some profits off the table?
No, first of all, I would say that he's in profit, so congratulations to him, and he should be keeping, trailing stop loss of 4,000. I mean, that's pretty important level for CAMS right now. I mean, that's the lower end of the range, and if it manages to surpass 4,400, it can reach to 4,600 as well. So, I mean, if he's a short-term trader, he should be eyeing for anything between 45 to 4,600 levels to book profits, and probably thereafter might trail as well. As of now, the trailing stop loss will be 4,000.
Okay, keep a trailing stop loss of 4,000. That's the view. Hope that answers your query. With that, we've come to the end of the query segment. And Jay, as always a pleasure chatting with you. I look forward to our next conversation as well. Wishing you a happy trading day.
Sure. Thank you so much. It's again, always likewise, pleasure being on your show and looking forward to join again. Thank you so much and wish you the same. You have a good day as well. Thank you.
Thank you. On that note, quickly take a look at the market. We are in the red, but no big cuts. It's a 40-point downtick on the Nifty, 112-point cut on the Sensex, but the broader end of the markets are holding out pretty smartly. The Nifty Mid-Cap Index is up 0.2%. The breadth is in favor of gainers, 2:1 almost. That's the NSE Advanced Decline Ratio. And as of now, the list of losers, in fact, is longer than the list of gainers today. I was hoping to see the opposite picture, but let's see how things really pan out. Global cues are muted and subdued. Of course, we are reacting to that negative inflation. In fact, higher inflation print in the US came as a disappointment, but let's see how things really pan out if we can stage a comeback, because the cuts aren't looking all that deep. But on that note, let me bring on board our next guest for today. Joining me is Gaurang Shah, Senior Vice President, Geojit Investments. Gaurang, chatting after a long time, and a lot has transpired. But let's talk about the recent developments then. Tariff-wise, higher numbers being thrown around. Markets were getting comfortable with the 10% figure. But, given what he's saying and the letters that have gone out now, 19% Indonesia, looks like, perhaps it will be higher than 10%. If that happens, how big of a risk do you see that to the market, momentum going forward? And of course, the other big cue, it's the first quarter earnings hasn't started on a great note. So where will the outperformance come from, which could provide some, reprieve, relief, support to the market?
Yes, Miss Khemka, good morning to you. It's been after a very long time that we are interacting. I did have one interaction with one of your colleagues in between. But yes, good to see you after a long time and good speaking with you, Nandita. So, to
Always a
answer your
pleasure, Gaurang.
question,
Always a pleasure.
thank you so much. So, to answer your question, I don't think one TCS number should be a trigger for you to write an obituary for the IT sector or for the earning season. We are just at the beginning of it, Nandita, and I think you will have today, tomorrow, day after Friday, I believe 18th July, we have Infosys, beg your pardon, Reliance announcing its numbers post market late evening.
That's correct.
According
That's
to
correct.
us, if you ask me, Nandita, I don't think TCS was an ugly number, to be very honest. It was a mixed number. And that is because of the backdrop of events which has been lined up. And we all know, Nandita, that US is a large part of contributor to the top line, bottom line. So there is possibility of improvement. Let's give it to it. And according to me, according to Geojit, of course, we remain positive on the IT pack. Let me give a disclosure first, Nandita. All recommendations on the fundamental side are a part of our research team view. Our company, Geojit or I, we do not have any personal investment, no financial interest, or nor there is any other kind of conflict of interest. We give similar recommendations to our clients. They might have their investment position. So large cap, mid cap, small cap IT is on our recommendation list for our research department. I think it's a great opportunity to do some bargain hunting from a long-term point of view in IT. HCL did well. Tata Tech was better than what they did last financial year, so, second, third quarter. Even fourth quarter was a little bit of disappointment. And my sense is that we should have a shade better earnings for this first quarter, this new financial year compared to the last quarter, fourth quarter, last financial year, fourth quarter.
So, are you penciling in double digit earnings for the Nifty universe?
Double digit, I think, given the events that are there, a little bit too much, but double digit in the next second half of this financial year cannot be ruled out. So, yes, I'm expecting third and fourth quarter to be much, much better than what
Okay.
we'll see in form of second and first quarter. And second and first quarter this financial year is better than what we saw last financial year, fourth quarter.
Sure, taking your point, but let's shift focus to some sectors like pharma. Individually, good news in terms of Sun Pharma. It got a boost from the early alopecia drug launch, but there is this 200% tariff threat hanging over pharma, right? And Trump has mentioned not one, two, four times that pharma will see never seen before kind of tariff. And last night again he said that pharma tariff may come into effect from the 1st of August. How are you looking at this space now? Given the fact that generics would be at risk more, would you prefer CDMO because of the tariff overhang?
I'll answer this, but I'll ask you one more question, Nandita. Donald Trump is going to be president for 4 years. He's completed almost about 1 year, 8 months or something like that. He's going to be there for another 3 years plus couple of months. Uh, he's spoken about 1 year plus kind of window for pharma for 200% tariff. According to what he's mentioned, MAGA, Make America Great Again, he wants a lot of people to come into America and start manufacturing over there. Now, Nandita, please tell me, to set up any kind of manufacturing activity in US, it's going to take at least 2 years plus or maybe 3 years. By the time he won't be a president, who knows what's going to happen in the next election. Point number two, anything that you make in America is not going to be cheap because the labor cost is very, very high. Land cost is very, very high. Legal cost is also very, very high. So how on earth does he imagine that within 1 year or 1.5 year, big manufacturing activities, especially with related to pharma, which is according to me again a very complex kind of manufacturing capability setup that are you going to do? So there is a lot that is at stake. Now coming to answer your question, we like pharma, generics, APIs, CRAMS, biosimilar, CDMOs. We are positive on all these themes. We have recommendation from large cap to mid cap to small cap pharma companies. And according to me, if you ask me personally, Nandita, when you look at pharma, just don't look at manufacturing, drug manufacturing companies. Look at healthcare, that is hospitals, and also look at diagnostics related companies, companies like Dr. Lal Path Labs. So in a nutshell, I think these three parts make a universe called pharma because all of them are dependent and very closely linked to each other.
Got your point, Gaurang. I want to talk about Glenmark in particular. If you have any view, it's managed to strike a big deal with AbbVie, transformative one. How much of an EPS upside do you see post this deal? Do you think it's already in the price? Because look at the charts. The stock has really taken off 30% move in the last 1 month itself. What are your thoughts? Do you think upside from here is capped, at least for a Glenmark?
I think it is capped because of the news flow. The run up that you've seen in Glenmark I think it's already in the price. To expect further upside from here, it'll be a little bit too much to expect. Any positivity of whatever news flows that have been driving the stock price on the higher side will take some time, Nandita. It's not going to be immediately. Again, as a disclosure, we have an accumulated stance on Glenmark Pharmaceuticals from our research team. Continue to hold on, not at current levels, but when you get dips, you can start accumulating more or you can make fresh investments as well.
All right, that's the view on Glenmark. Upside may be capped, but continue to hold on to it. But let's talk about the media space, particularly PVR. Some negative development. Of course, it's still a draft. The Karnataka government has proposed capping movie ticket prices at 200 rupees. It's of course in the draft stage, but if implemented, how significant could be the impact on the revenue, profitability, especially in premium formats like IMAX or recliner screens that typically charge higher because it's more capex oriented. How do you see this whole situation panning out? Do you think exhibitors perhaps could it could tilt in favor of exhibitors if they justify the fact that it is a capex intensive space, so they should be charging higher price for the tickets?
So again, pricing is going to be a factor that will be dependent on what kind of footfalls you expect. And to be very honest with you, one thing is also there, the competition from OTT platforms, Nandita. That's already created another problem in terms of footfalls into multiplexes or single screen cinemas. Now, whatever acquisitions PVR Inox did over a couple of times, I think it has become one of the largest exhibitors in its sector, one of the leading companies in its sector. Unfortunately, releases from Tollywood, Mollywood, and Bollywood attracts footfalls, but Bollywood is something that has failed to attract crowd to the multiplexes. Food and beverages revenue is also slowly picking up space, but nothing great. Ad revenues only happen when there are big events like election, etc., etc. So the survival is difficult, to be very honest. And with this kind of statements coming out from, say, for example, today it is state of Karnataka, tomorrow it could be another state, could have some kind of issues in terms of earning visibility. Having said that, we have a positive coverage on PVR Inox. If you have investment at lower levels, then you can continue to hold on. But I think the challenge will remain, and I think the management has also spoken about it during last financial year, fourth quarter. Earning visibility is a little bit sticky and patchy unless and until you have some great box office hits coming out from across Bollywoods and Tollywoods and Hollywood. So one needs to be just a little bit wait and watch kind of it.
All right, a wait and watch kind of an approach when it comes to PVR. Obviously we'll have to see which way the ruling also goes in terms of capping ticket prices. But in terms of other sectors, and I want to focus in on the auto pack. Yesterday we had Tesla's maiden showroom being ruled out in Mumbai. The pricing 60 lakhs may have come as a reprieve for other names like M&M, Tata Motors, etc., because they were all up in trade yesterday. Do you think competition concerns are quelled? And now, given the fact that we are seeing good traction in two-wheelers as well, what should one look at? Because for two-wheelers, multiple factors at play, monsoons, tax cuts, revival in rural demand, etc. So, which way would you tilt?
Well, so I mean, to be very honest, there are other players also which are already there. For example, the Chinese BYD company, Build Your Dreams. You have Tesla, then you have a Vietnamese company, VinFast, if I'm not mistaken. All EV players wanting to create their own presence in India. 60 lakhs is the price tag for the base model, uh, and that too on the color that the company is offering. If you want a choice of your color, I think the price will increase by 1 lakh or 2 lakh rupees, depending
Yeah.
upon what shade you are wanting your Tesla Y model into. And of course, the high-end model is costing you somewhere close to about 68 or 69 lakhs. I have
Yeah.
my own reservations, to be very honest, Nandita. There are better products available from Indian manufacturers. That's what my understanding is, and my understanding is maybe very, very limited, but that's what I think, and I stand to be corrected if I'm wrong. It has to prove its worth on the roads in India, and of course, the maintenance part of it also. So we are positive on the entire auto pack, minus this VinFast or BYD or the Teslas coming into India. I don't think it will be, it's going to, according to me, again, I stand to be corrected. I don't think it's going to be a big, big competition for the domestic players. And I think there is enough appetite for Indian companies to coexist with foreign counterparts and at the same time maintain their market share, and even export market is a big opportunity. So we remain positive on autos, two-wheelers, three-wheelers, four-wheelers, commercial vehicle, tractors, earth-moving equipments.
Okay, that's the view. Of course, India is a price-sensitive market as well. So 60 lakh and beyond, we will have to see what kind of response Tesla gets. And of course, this whole tariff issue is also one watchable, key monitorable rather, when it comes to Tesla. But let's talk about Dixon Tech as well. Last question really, among the last questions, last few questions, Gaurang. Dixon Tech has, will make an acquisition, 51% stake in Q Tech India. This will be via combination of primary and secondary investment. Now, I was just reading a report from CLSA on Dixon Tech. It's listed this company or this stock as a high conviction outperform, and the target price is at 19,000. We did see some correction kicking in when it comes to Dixon Tech, but the stock has done well to recover quite smartly from April lows. Post this acquisition, do you see a lot of value addition coming in? Smartphone wise, and what kind of a margin expansion can one really expect post this acquisition?
So firstly, I'll talk about the sector, Nandita. This was the same company last week, correct me if I'm wrong, there was a sell side report and the targets were, I think, sub 12,000 or thereabouts. This is what I possibly read and heard. The entire chip, semiconductor, EMS, PCBs is a sector which is likely to be in the spotlight for all the good reasons. You very well recollect China artificially creating short supply for chip, semiconductor, PCBs for the EMS sector. Taiwan had its limitation in terms of production capability, capacity, and supplying into India, and the rest is history. Fast forward to the current situation, thanks to the PLI policies that were formed by the government. Unfortunately, that Made in India chip launch was delayed by a couple of months. It was supposed to happen last year, I believe December 24. But I think the new statement from the government and the minister is that very soon you will see, before December 25, you will see a chip getting launched into India with respect to semiconductor, etc., etc. PLI scheme for the EMS sector auguring extremely well. Support from the government. Very, very supportive. Opportunity definitely there. India being a net importer is the possibility where it will become an exporter of semiconductor chips and PCBs. We like the sector. Our research team likes the sector. Unfortunately, Dixon is something that we don't have a coverage, but one company that has been hogging the spotlight in the same sector since last week is PG Electroplast. That is where our fundamental team has a coverage.
Okay. All right, that was about the EMS space, but what are you liking at the current juncture, and which provides valuation comfort and which has the potential to yield good returns over the next 2 to 3 years? Any particular pockets that you would focus on?
So I'll add to your question the earnings, first quarter earnings also. On the basis of first quarter earnings, Nandita, what is that? And of course, the standalone recommendation. Sectorially speaking, there are about 5 or 6 sectors. Large part, Nandita, what thought process that we had in mind was when all this tariff related, tantrums and tandav started in April 2nd, we started to look at sectors which are relatively insulated from the external news flows, global news flows, and which are relatively dependent on domestic consumption theme and story. So keeping that in mind, first of all, the entire BFSI segment, public sector bank, private sector banks, NBFCs diversified, cap goods engineering, defense, power, cement, real estate. These are some of the 6 themes primarily. Of course, FMCG is likely to pick up consumption ground level from third quarter, October, November, December, this financial year. That is also on the radar. But primarily, these 6 sectorial themes are something that we are focusing on. And what we've advised to those clients who have a relatively lesser risk appetite to look at these sectors. For those with elevated risk appetite, they can definitely have IT, they can definitely have autos, pharma, specialty chemicals, agrochemicals on the radar.
What about paints? Do you think paints as a sector has bottomed out? The likes of Asian Paints, they saw renewed buying interest of late. All the competition concerns, do you think they are all in the price now?
So the paint sector is a tailwind positive. If real estate sector does well, Nandita, paint, bathroom, high-end fittings, sanitary ware, vitrified tiles, marbles, white good appliances like, microwaves and state-of-the-art air conditioning systems, etc. will do well. And look, Nandita, I'll just give you an example. I think it was about 3 weeks back. DLF in Delhi, Noida, I believe sold off one entire project of 11,000 crores in a matter of 10 days time. Now, people who could afford that kind of property will definitely can afford at least 3 or 4 split air conditioners, state-of-the-art in their home, modernized, consumer durable equipments in their home. So the demand is likely to come in from this. To answer your question, I think a real estate sector doing well reflects good on paint, consumer durable, vitrified tiles, marbles, bathroom high-end fittings, etc., etc. We have coverage on 2 names in the paint sector, Kansai Narolac and Berger Paints. These are the 2 that features on the positive side.
Okay, very holistic answer. Of course, if the real estate sector does well, all these sub-sectors, so to say, will be doing well as well. But with that, Gaurang, lovely chatting with you. A lot of good insights, and I hope to touch base again sometime soon. Always a pleasure. Thank you. Thanks a lot for joining in this morning.
Thank you, Nandita. Thank you for hosting me on this. Thank you so much. Take care. Bye-bye.
Thank you. Thank you. Well, take a look at the market then before we say goodbye. Just 35-point downtick on the index. It's a 96-point downtick on the Sensex as well. The mid-cap index just about holding on to the positive territory. Advanced decline ratio is still skewed in favor of gainers. It's turning out to be a mixed, okayish kind of a session. Let's see how things really pan out. The list of gainers is smaller than the list of laggards. HDFC Life, that's the top gainer, followed by some IT names continue to see buying. Wipro, Infosys, these are the gainers. Even HCL Tech is in the green. SBI extending gains, SBI Life as well among gainers. Not doing well are the likes of Shriram Finance. All those auto companies that saw buying interest yesterday have succumbed to profit taking. So Bajaj Auto, Hero Moto, Tata Motors, M&M, all of them are in the red as we speak. But with that, we have come to the end of this edition of Opening Bell. Thanks a lot for tuning in. Of course, we'll be seeing you at 3:30 p.m. with market close. So don't forget to tune in for Closing Bell, and I'll see you then. Thank you for watching.